Well, good afternoon, traders. Hello there. Hello, traders. I hope you're all well. I hope you can see me. I hope you can hear me. Welcome to today's session on trading, dreams versus reality. It's an interesting topic, plenty for us all to learn about. If you're joining us here today in the session, it's great to have you here. I appreciate that here at Admirals, we have a truly global audience, okay? So from wherever in the world you're joining us, welcome. Hope you and your family are well. We appreciate you coming to join us. Also recognize that we have a broad range of experience for the people who join us on our sessions, from complete beginners to very experienced traders. Doesn't matter whether you've been trading for 2 weeks or 2 decades, you're all very welcome. There's always something you can learn. You're all welcome to ask questions away in the chat box. If you're joining us later here, okay, watching this on the Admirals YouTube channel, then by all means, you're very welcome. Just be sure to subscribe, okay? If you found this useful, give us a thumbs up. If it wasn't for you, give us a thumbs down. That's okay. We appreciate all feedback. And you can put comments in the comments box itself, okay? Maybe you have ideas or thoughts about the session. Maybe you've got topics you'd like to see us cover in the future. By all means, put it in there. And also at the end of this session, what you do is you'll get just a little feedback form. We'd really appreciate it if you could just take a couple of minutes to basically just fill that out. It always helps us, okay? We want to just make Trading Spotlight webinars as truly as effective and as helpful and supportive as we possibly can. So without further ado, let's switch across to the slide, shall we? And talk about our topic for today, trading dreams versus reality. Good afternoon, Tina. Great to see you here. Okay, we're just putting this here. Hopefully, as I said, you can should be able to see me. Hopefully, you should be able to hear me. Hopefully, you should all be able to see the slides. Trading dreams versus reality. Okay, so what is this all about? You might be saying. Well, I've been trading for a long time. I have coached and mentored traders for a long time. I've worked on trading floors. I've seen the full breadth of traders, from people starting out as complete private traders trading at home, okay, to guys and girls sort of working at tier 1 institutions, trading large sums, running a desk, running a book, okay, at a big financial institution. So I've had been fortunate to effectively sort of traded on floors, and also been around all sorts of traders, okay. And what it is here in this particular session, what we want to do is to sort of just try and help traders, okay, particularly new traders, just try to understand, okay, the difference between, the trading dreams that many people come to trading with, but also what is the reality like, okay, and how you can utilize that reality to help you, okay, in accelerating your progress on your own trading journey. So, I mean, it'd be kind of useful to sort of hear, for the people here in the room, how long have you been trading for? Okay, have you been trading for 2 weeks? Have you been trading for 2 decades? Okay, as I said, it doesn't really matter. It's really just about, getting the feedback and understanding. And as I said, I'm sure that wherever you are on your own trading journey, you will have had thoughts and comments, okay, and questions about your own experiences. And this is a great opportunity for you to be able to sort of to put that in. So, welcome, Rudolph. Okay, good afternoon to you as well. Rudolph says he's still on demo. That's absolutely fine. Okay, we're all on the journey. Okay, we all had to start somewhere. All right, we all have to start somewhere. Okay, and it doesn't, as I said, it doesn't really matter whether you've been trading for 2 weeks or 2 decades. You're all very welcome here. Okay, and this is an opportunity to basically learn a little bit about what's required and also have your questions answered. Hello, Teresa. You're very welcome. Teresa says she's still learning. Well, it might be said, Teresa, that we are all still learning. Okay, as a trader, you never really fully, have finished your learning journey. Okay, there's always something more. There's always something happening and changing. There's always something to learn about your craft, because that's what I believe trading to be. It is a craft, and like any good craftsman, you're always working at trying to hone your craft as well as you possibly can. So remember, Admirals, they are a Forex and CFD broker with global presence, but providing local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and giving you the opportunity to engage with markets using both the very popular MT4 and MT5 trading platforms. If you have any questions about Admirals, please get in touch with your account representative. They'll be very happy to help guide you. And also remember, at the moment, there's also Admirals trade days are running. These are an opportunity for you as a trader to actually receive a rebate back on your trading activity up to €3,000. As I said, if you have any questions about that, please get in touch with your account representative and they'll be very happy to help guide you, or take a look at the Admirals website. So what are we going to talk about today? What's the agenda for our session today? Well, we'll talk a little bit about, what people expect when they start trading, okay? What it is about the expectations they may have, and are they actually, are they realistic? What is the dream, okay? What is the dream when it comes to trading, and what does the reality look like for many, many traders? And we'll talk about how do we sort of turn your kind of your trading dream into a trading reality, okay? What is it, the things that you really need to be doing, okay, regardless of where you are on your journey, in order to sort of achieve your own trading dreams. So for those who don't know me, my name's Paul. I've traded for many, many years, okay? Trading for myself, trading for funds, trading for individuals. I also coached and mentored many thousands of traders over the years, okay? So I can talk about this from owning my own experience, but also having worked with and coached and mentored and educated many, many traders over the years. Primarily, I like to trade FX indices and commodities. For my longer term swing and position trades, I'm a trend trader. And for my shorter term intraday trading, I tend to be a reversal trader. So the trading dream versus reality, ladies and gentlemen. It would be interesting to know, for those of you here, what is the trading dream for you? What do you believe is your trading dream? What is it that you think that actually, you can, you have in your own particular dream side state in terms of what you believe trading and your trading lifestyle to be like? As the slide says, many people are attracted to trading because of the lifestyle that they believe it can offer them. Unfortunately, many traders have very poorly set expectations and goals, and that leads to poor performance, frustration, and failure. Today, what we'll do is we'll share the difference between the trading dream and the trading reality. Understanding this difference will help you manage your own expectations, goals, and behaviors, which will help you ultimately succeed. As I said there, lots of people are attracted to trading because of a belief of a particular lifestyle that it may actually offer them. But because they come with very poor expectations and goals, well, invariably, it's almost as if they're kind of setting themselves up for failure. And so what happens is they lead to experiencing poor performance, frustration, and ultimately failure. What we want to do today is to sort of explain and understand the difference between trading dreams and the trading reality, and actually about how embracing the reality of trading is what will actually help you achieve your trading dreams faster. So what is the dream? As I said, maybe you have thoughts about what is the trading dream to yourself. But, what we talk about, okay, maybe I'll be a little bit flippant here, is that, many people think the trading dream is that they're going to spend their days, okay, on their private jet or their private yacht, flying to their private island where they live a life of opulence and abundance. Many people are attracted to trading because of that, because maybe they see some sort of advertising on internet, okay, or on particular social media platforms, which gives them let's say a rather skewed view on what trading is all about. It's okay if you were attracted to trading for that, okay? There's nothing particularly wrong in that. We all particularly want to have prosperous lives. We all generally tend to want to have lives that are more prosperous, more abundant, okay, more successful than those of our parents. And it's actually what parents want for their children. What it is, though, is, as I said, is about having kind of, making sure that you have the right goals and expectations, because, if they're not, well, then actually it just becomes a dream. For many people, especially those people who have, let's say, have very poor goals, very poorly misunderstood expectations, and generally uneducated as a trader, well, the reality can become quite different. As I said, it can become very, very different instead. And it's a case of, it leads to poor performance, frustration, ultimately failure, and very often those people giving up on trading. And a lot of that is because, as I said, they've come to trading with, the wrong expectations. Okay, they are believing in a trading dream state, and actually the reality can be very, very different. And what we are here today, as I speak to you as, as one trader to another, I'm here to represent Admirals, and here at Admirals, we want to sort of, provide reality, okay, understand, what the reality is. We find, markets and trading utterly fascinating. We absolutely love and adore it. But what we also realize is that, we have to be able to sort of set the right kind of expectations for our clients so that you're in the best position to sort of perform the best that you possibly can as a trader, which is what we want to see. So with that in mind, if we want to sort of embrace the reality, if we want to talk about and discuss, where is the reality as opposed to what are the kind of, let's say, the trading dreams, what do we need to ensure we do? What do we actually need to make sure that we are doing every day to give us the chance of, embracing the trading reality, which will actually give us the best opportunity to achieve our trading dreams. So what we're going to do is we're going to talk about all these sort of things that you can do. Maybe some of them will be obvious to you. Maybe some of them we'll actually already know, but sometimes you just need to hear it from somebody else for it to click into place for you, for you to recognize it and take on board. And the first thing we can talk about is that actually, when you're engaged in trading, really the trading reality is that you should be a risk manager first and a trader/speculator second. Managing risk is absolutely key. And whether you love or loathe him, Mr. Soros has been very successful as a trader, and he came out with that quote there, is that my principle is to survive first and make money afterwards. And he's absolutely right. You are a risk manager first. And what I find, okay, my own experience, okay, having, as I said, been around trading for many, many years, is that an awful lot of people come to trading, okay, right, but actually they don't really understand, or they don't sort of give enough value or emphasis to managing risk. Whereas the people who manage risk the best tend to be the ones that tend to be long-term the most successful. So just take a moment to recognize and embrace the trading reality that you are a risk manager first and foremost. You're always a risk manager first and foremost, and then you're a trader second. And this great quote from a very good trader who wrote a very good book on trading, Mastering the Trade. He says here that amateur traders focus on how much money they can make on each trade. Professional traders focus on limiting risk and protecting capital. Professionals always take money away from amateurs. That is an absolutely fabulous quote, okay? And John, who I've met a couple of times in my trading career, is absolutely spot on. But let me just be quite clear here, okay? I mean, sometimes people misconstrue the sort of meaning of amateur and professional. The way I would like to define it, okay, is that you're either an amateur with a hobby or you're a professional with a business. Doesn't mean that amateur is a private trader or professional is a guy working on, on a trading floor in a bank. As I said, believe me, I've spent lots of time working on trading floors in the City of London and Dublin and elsewhere. And what I've seen is that, there can be some unbelievably talented people working on trading floors, institutional trading floors. But not all of them are what I would define as a professional trader. Again, some of them are very amateurish in the way they go about. And what really does focus on is just that simple statement. Amateur traders focus on how much money they can make on each trade. Professional traders focus on limiting risk and protecting capital. Right? Notice that professional traders focus on limiting risk and protecting capital. It is not about them having the fanciest trading strategy. It's not about them having the smartest, the best, the fastest computer. It's about limiting risk and protecting capital. Remember, trading reality is that you are a risk manager first and a trading second. And that is unbelievably important to take on board. Okay, unbelievably important. And the truth is very simply, because I've seen it, okay, across the spectrum over many, many years, if you're not managing risk, you'll end up as roadkill. All right, that might be a little bit harsh, I know, but sometimes we need to hear a little harsh message for it to sink in. All right. And when it comes to managing risk, the simplest things you can do, very simple things you can do, is namely two very simple things. One, okay, never ever trade without stop loss. Secondly, just always ensure that you never risk more than a small amount of your capital on any one trade. If you continue to do that, okay, then you will effectively, you'll have started to manage risk, all right? There are ways and there's better and there's more nuances. But if you can do those two things, and if that's the only thing you take from today's session, if you do those two things as part of managing risk, as part of your risk protocols, you will give yourself the very best opportunity by embracing trading reality to achieve those particular trading dreams. Secondly, well, what would be the second point is that everybody pays for their education as a trader. Everyone pays for their education. Work out what you need to educate yourself, because everyone pays one way or another. Generally, I would describe it that you have effectively, you've got two paths as a trader on your journey. One of them is that you actually have to go down, being formally educated, maybe perhaps, from an education company or a mentor, etc. The other one is that, you are self-taught, okay? You're self-taught, and that you actually sort of learn from your own mistakes. You learn from, as going forward and sort of developing yourself as a trader. What I will say is that, sometimes that decision is made for you. Maybe you don't have the budgets to effectively engage with an educator. That's absolutely fine. But what you have to realize is that, if you're going to be self-taught, well, then invariably what's going to happen is, the timeline of your journey is going to be much longer. You'll probably also make, more sort of losing trades as part of your self-education program. So there's no escaping it. There is no shortcut. Everybody pays for their education. It's just about understanding, what it is you require and how you will go down it. And there's both pros and cons to both paths. So, I understand, but never think that you can get away without it. Okay, never think that you don't need to pay for your education, because, as I said, if you're going to pay, you're going to pay in a commercial, commensurate way, or you're going to pay for it, okay, in terms of time and losing trades. That choice is yours. And part of that leads on to another point, namely that you have to learn how to trade for yourself. What do I actually mean by that? Well, if you go onto social media platforms, and I'm sure you all have them, I'm sure you all have access to them. If you go onto there, you will find that there is a plethora, okay, of advertisements and offerings for all manner of, these days, mostly sort of trading robots, okay, that you can plug into your MetaTrader platform that will take away all the stress and pain of trading, and that actually just allow you, supposedly, to turn your MetaTrader platform into just, your own ATM, into your own cash machine. I wish it was that simple and easy, ladies and gentlemen. The truth is, it is not, okay? The truth is, it is not. The reality is, okay, you have to learn how to trade for yourself. Okay, there is no real shortcut. Yes, you can have education programs. Yes, you can work with mentors, etc., which will help. But ultimately, it comes down to you having to learn how to trade for yourself. It comes down to you actually having to, plan a trade, trade a plan, manage a risk. Okay, trade well, session by session, day by day, week by week, month by month, quarter by quarter, year by year. There is no real escaping that, ladies and gentlemen, all right? People might try to tell you that they can, that you can just plug something into your MetaTrader, and then invariably, you, as I said, you will turn your laptop, okay, into a cash machine. I wish it was that simple. The truth is, it is not. You have to learn how to trade for yourself, okay? And there are ways and means to do that, okay? There are, as we just discussed, you could go down a formal education route, or you could teach yourself, all right? There's plenty of, fantastic resources out there. Even if you take a look at the Admirals website, if you go under the education tab, you will find a whole stream, okay, of fantastic resources that you can tap into to utilize to help you with your own educational needs. But long and short of it, you have to learn how to trade for yourself, okay? There's no sort of getting away from a little bit of screen time, a bit like me there, okay, in the middle photo, actually just being sat in front of the screens, working away, okay, learning how to trade, learning how to be the best trader you can. Doesn't really matter what you want to do in life, whether you want to learn how to drive a car, whether you want to learn how to fly a plane, whether you want to learn how to play a sport, okay, whether you want to, work on your health and fitness. It's something you have to do yourself, okay? You can't sort of, outsource that to somebody else, as much as you might like to think you can. The truth of the matter is, you've got to commit, okay? You've got to commit to the task at hand and realize that, you know, whilst your trading dreams might be just to turn on your laptop and turn it into a money-making machine, the reality is you have to be a professional with a business and learn how to trade and work at it. And as I keep saying, hone your craft. You're never done with learning, okay? You know, I've been trading for many, many years, still constantly learning something new every day. You know, and the moment that you think that you know it all is normally the moment you're about to be taught a very, very important and painful lesson by the markets. Markets tend to keep you humble, all right? Markets tend to keep good traders pretty humble, right? Because they know that you're always learning. Markets are always changing. You're always having to adapt to new environments, to new situations, okay? And you only do that by learning how to trade for yourself. But enjoy it, love it, all right? You know, I love trading. Trading to me is a passion, and I would define passion as something that I cannot live without, okay? Something, and trading is like that for me, okay? You know, and I enjoy it for every element of it. Even, you know, even when I might have a couple of losing trades, you know, I know that there is something I can learn from that, going through the debrief process, just ensuring that what can I learn? How can I every day be a better trader tomorrow than I was today? You have to learn to walk before you can run, okay? And, you know, how do I define that? How do I mean that, okay? What does that actually mean? Well, you know in your own, you know, when you were a baby and stuff, you have to learn how to crawl, then walk before you can actually run. In trading, many people you'll find will actually sort of try and take that shortcut and think they can run. How would I define that? Well, for me, I see lots of traders who try and trade, you know, very fast intraday volatile markets. Maybe they're trying to trade the NASDAQ on a 1-minute chart, okay, or they're trying to trade, you know, they're trying to trade, you know, Aussie yen on a 5-minute chart, okay, so they can be quite volatile, a lot of movement, all right, and they've just thrown themselves in there, right in at the deep end, in an almost sink or swim kind of environment, okay, and then they wonder why they struggle, okay, because, you know, they're fueled by optimism bias, okay, you know, they're fueled by optimism bias, they're kind of invariably underskilled, overconfident. Think about that, okay? Engaging with markets when you're underskilled and overconfident, that generally doesn't tend to where to end very well. If you're going in for an operation, okay, in your hospital, you wouldn't want your surgeon to be underskilled and overconfident. If you were going on a flight on your holidays, okay, you wouldn't want the jumbo jet pilot to be underskilled or overconfident, etc. In many, many ways, okay, that. But, you know, many people with trading come to it, and as I say, they try to run before they can even crawl or walk. And with trading, that means just the way that you actually look at going about, you know, your trading operations. You know, as I said, you have to learn to walk before you can run. And in many times, okay, for traders, what I find that has a lot to do with is, a lot of that is to do with effectively scaling up their position size. That's just one very good example of it. Because what we find is that, you know, very often private traders, you know, they've come to trading because they want to make a change in their life. All right, they may, you know, they're unhappy in their own particular present lifestyle. Maybe it's a relationship, maybe it's where they are living, maybe it's the job they're invariably in. And invariably they want to make a change. They're being positive. And in doing so, trying to do that, they invariably sort of try to force the situation. They try to push too hard. Instead, they're trying to run before they can walk. And so what might happen is they get a little bit of success as a trader, and they decide that if they scale up their position size very quickly, well, that will allow them to be prosperous, it'll allow them to be abundant, allow them to make changes to their lives much, much faster. But what will tend to happen is the traders are mentally and emotionally ready for that change in their, let's say, their trading environment. And so, you know, once they go from sort of trading a very small size to trading a very large size, that can have mental and emotional challenges upon the trader and give them a little bit of a trading psychology challenge to deal with. So what I say is, you know, you have to learn to crawl before you can walk, before you can run. And that means in trading, take some time scaling up your position size, okay? I know that can be frustrating. I know that can be challenging. I know that can actually, if you're a little bit impatient, that can be unbelievably frustrating for an individual. But believe me, okay, take that little bit of time and you'll be able to increase and improve and just generally sort of, you know, take yourself further forward as a trader over time. One of the next elements is about getting yourself a mentor, okay? Because everybody needs one. Everybody needs their own Yoda. Everybody needs their own Mr. Miyagi, okay? I know those are cultural references for me from the 80s, but I'm sure most of the people here joining us will understand and know who they are. Now, that doesn't mean, okay, that you actually have to go out and, and pay for a mentor, okay? Some people will be able to do that. Some people will, that will help them enormously. It could actually be an informal mentor. Maybe it is your opportunity to find a trader who is a few years down the line from you, okay? And actually they could help you, all right? They may be able to help you. Maybe there is an opportunity for, a budding trader buddy relationship. You're able to offer something to them to help them, okay? And in return, they will mentor you. But I think actually what happens is that, it helps you in terms of your own particular performance improvement. Most traders, okay, in fact, most individuals, when they're trying any new skill, mostly we start off as unconsciously incompetent. We don't even know what we're doing wrong. With a little bit of, practice, well, then invariably we become what they call consciously incompetent. So, we know we're doing wrong stuff. We know what we're doing the wrong things. And what we want to do is to get to a point of being consciously competent. So going from consciously incompetent to consciously competent. And there has to be like a bridge between that. And very often having a mentor is what will actually create that bridge for you. If you think about it, for many of you, if you've learned to drive a car, you might understood it. You might, wanted to sort of play around with driving a car, but it's only when you actually spend a little bit of time with a driving instructor. They are what is the bridge that gets you from being consciously incompetent to consciously competent. And a mentor in trading can do the same for you. It can move you from being consciously incompetent towards consciously competent. And that's where it actually can help you. And the truth is, when we talk about mentors, and I talk to lots of people, around the world about traders, most of us know what we need to do. In our own lives, most of us know we need to, sleep better, get more sleep, get more rest, okay, exercise more, watch less television, drink less alcohol, eat more healthy fruit and vegetables. We all know what to do, okay, but very often we won't do it. And one other element of having a good mentor is that they provide an element of accountability. And that can be very, very important and useful for traders who are sat at home working away on their own. Believe me, that can be enormously helpful, because when you're sat at home on your own, the only voice you listen to is the one inside your head. And sometimes that is not actually the best voice to be listening to. And a private trader, okay, an amateur trader can actually be the best salespeople in the world, that they can sell themselves that whatever course of action they take, that was the right course of action. Whereas actually an objective observer who's a mentor provides an element of accountability and stops you from actually straying too far off the ranch, makes sure that you keep on plan and on track. And what I say is that, a good mentor should also help you develop your own style as a trader. Now, when I speak to, in the past, I would speak at large trading conferences, okay, and, there might be 100 people in the room. And what I would talk about is how, we all have our own trading style. We might have some principles that we follow, but we all develop our own trading style. And I could point out to a room of 100 traders there, let's just say for the case of this particular example, 100 male traders. I would know that they are all following the proper principles, namely that they are wearing clothes, okay? And that they are wearing shoes, trousers, and a top. But actually, if you look at those 100 people, not two people were wearing exactly the same. There might be variations, but everybody had their own style. Now, when it comes to clothes, some people are more stylish than others. And it's not for me to pass judgment on people's fashion style. But it's the same with trading. We all have principles that we need to follow, but we will also develop our own trading style. And a good mentor should help you perfect your own trading style and stop you making a trading faux pas. And that's important to take on board, okay? Because your ability to have continuous, sustainable success will come from when you trade in line with your own style, your own personality, your own character, your own beliefs. And a good mentor should help you develop your own style. And if you don't believe me, Paul Tudor Jones, okay, who would be he'd be like my trading hero, my professional trading hero. You can read about him in Market Wizards. He pays the, let's call him the sort of American coach, Tony Robbins, over $1 million a year, okay, to keep mentoring him, even though he's not a trader. He does that to basically keep him in his best place in order that he can trade the best he possibly can. So if you don't want to believe me about that, well, I would suggest believe Paul Tudor Jones, because he's an unbelievably successful trader. So the next point is about have a plan and keep great trading records, right? Those of you who will know me, those who will have sort of either seen me talking here or on my own channel will know I will always go on about keeping great trading records, okay? This is one of the things that can start to move you from, being an amateur towards being a professional, keeping great trading records and analyze them to accelerate your trading progress. Now, I find lots of people, they don't want to keep great trading records. Paul, it's boring. I don't want to do it and stuff. I just want to trade, I just want to get enjoyed. I just want the action of the markets, okay? But the thing is, if you don't do that, okay, well, what happens is then you find people just keep repeating the same mistakes. Keeping great trading records and then spending time analyzing them forces you to accept the trading reality. It forces you to embrace the trading reality and see where you're doing well, but also where you've not been doing so well, and what are the areas you need to sort of focus on for your own trading development. And that can absolutely make a huge difference to you in your own trading progress. Believe me on that, okay? I have never worked with or seen or met a great trader who didn't keep great trading records. Some people might not keep great records and they might have a little piece here and there when they are successful, but those who are long-term, sustainably successful all have great trading records and they all analyze them to accelerate their trading progress. It is a simple thing that you can do that will help develop you as a trader. One of the other elements, which comes back to one of our earlier points, is that we live in a world today where there is an abundance, okay, an abundance of opinions and analysis, okay, and insight on financial markets and trading across the whole of social media, and even in particular, financial social media. However, what you'll realize is that with a bit of time is that very often it actually doesn't help at all. In fact, very often you might actually see and read complete, opinions that completely counter each other. It will just leave you as a new trader just feeling a little bit confused, not really entirely sure to who or to understand. And that's because, like the middle picture there from the 70s American pop group, there's a lot of talking heads, okay, on financial media. And yes, they can give you a little bit of the news. Yes, they can give you a little bit of insight. Now and then there will be things that will help, understand, markets generally. But the truth of the matter is, if you're looking for them to help you make trading decisions, well, then invariably what you're doing is, you're just basically, you're effectively sort of, giving away your responsibility. What I'm saying is actually what you need to do in terms of embracing a trading reality is learn to make your own decisions. That does mean you're going to be wrong. That's okay, as we'll come on to in a couple of slides. But if you make your own decisions and they don't go well, then actually you can understand, what did I do? What did I do? Remember the previous point, keeping good records and analyzing will help you move on. So, if you think that, watching financial media is going to help you, sort of nail the absolute greatest trades ever, I can assure you that is probably not the case. You need to learn to make your own decisions. One of the things we also need to take aboard as private traders is that the vast majority of private traders will use technical analysis as a way and means to make their trading decisions. I do myself, okay, and it's what I like to do because I'm a visual trader. I can make a decision, and that helps me enormously. And whilst, what many private traders will realize that actually fundamentals don't really particularly help them, What I will also say is that fundamentals will trump technicals. What do I actually mean by that? Namely that technicals, well, we're generally sort of trading the price action, okay, and that's what we're looking to do. Fundamentals is really, especially when it comes to sort of formal news, is when we're expecting new information to come into the market. That might be in a formal way, okay, in terms of, a release on the economic calendar. Or perhaps maybe it's not a formal. Maybe there's a conflict. Okay, maybe there's an accident. Okay, maybe there's a geopolitical event. Maybe there is an agricultural event like a crop harvest fails, and those fundamentals, that big piece of news coming in, will trump the technicals. And what I mean by that is you can have an absolutely beautiful looking setup, absolutely beautiful trading setup, which just meets your particular trading plan. You put the trade on, and then invariably we find that there is, a new war opens up somewhere, or there is a piece of very, very poor political news. This news comes into the market, okay, and invariably that will actually happen. That will shift the market because basically people's opinions will change very, very rapidly. Those opinions might not be right. It's very often that the first move is kind of the false move. But what you have to be ready and prepared for is to adapt and overcome. Right? When new information comes into the market, be prepared to adapt and overcome. That can take down a board. And I appreciate that is something you need to practice, something you need to work at. That's not something you're going to get on day one of your trading career. It might take a couple of years for you to truly understand that. And actually, as I've said earlier, you will always continually learn and understand that. There's always stuff going on in the world, and they will all have, implications of varying degrees upon financial markets. So even though you might want to take, use technicals for your main trading decisions, don't be shocked, okay, when fundamentals trump the technicals. That's okay. Just be prepared to adapt and overcome. And if you've been following the first rule we talked about, which is that you're a risk manager first and a trader second, you'll be okay. You'll live to fight another day. One of the other things that I can sort of definitely advise in terms of embracing your trading reality is that less is more. Okay, it pays to keep it simple. I very often, have new traders who are struggling and are frustrated, and they'll send me a chart, of their how they look to make their trading decisions, and a bit like this chart here, they are just absolutely full of all sorts of indicators. And they'll tell to me, Paul, I just don't know, I don't know what to do. I don't know, I'm just overwhelmed. And I will look at that chart myself and say to them, I myself have absolutely no idea what to do with that chart. They might have 10 different moving averages. They might have Bollinger Bands, Keltner channels, Ichimoku clouds, 5 or 6 different indicators underneath, What we do is new traders add indicator upon indicator upon indicator because they think it's going to be like a security blanket for them. They think that if they have 20 indicators and they all line up, well, then it is a dead cert trade. What they'll find is that if you've got 20 indicators, you might only get 2 trade signals a year. And even they may actually fail, Even that can possibly fail. There's no perfection in that whatsoever, all right? No perfection in that whatsoever. So my view is always keep it simple, all right? Just keep it simple. Strip away, Instead of looking to add stuff to your charts, do the opposite, strip it away. That is actually what will help you better. We also have to take a little bit of time to understand, what type of trader are you? And the better you understand what type of trader you are, in the general sense, the better you are likely to be a trader going forward. But you have to think about, what type of trader are you? Are you Rambo, the old American sort of movie star of the 80s and 90s, or are you the sniper? If you ever watch those Rambo movies, Rambo will be spraying off bullets left, right, and center. And very often I find new traders are a bit like trading Rambo, and they're spraying trades all over the markets like Rambo sort of, with sprayed bullets. The thing is, Rambo was he was a Hollywood movie actor, so he never ran out of bullets, did he? Never ran out of bullets. Whereas you, as a private trader, well, when you get into over trading, right, well, invariably, over trading will be the end of you. What you need to be able to do is to start to shift yourself away from being a Rambo towards being a sniper, It's about keeping your powder dry. It's about saving your bullets for the high probability shot. Now, what I will say is that it is easier to be a sniper if you know exactly what you're looking for. Hence why keeping great records, okay, about what works for you as a trader becomes unbelievably important, because you can very quickly start to work out which the type of trades actually suit you. Okay, you don't actually have to trade 20 or 30 different trade setups. You might actually only have 2 or 3 that you know you work for you and that you can follow them, okay, time after time after time. So ask yourself a question in your own trading at the moment. Are you more of a Rambo, all right, or are you more of a sniper? Take the time to sort of think about that. The next point is about get comfortable being wrong, okay? Because the truth is, you're going to be wrong a lot, many times, and that's okay. It is, you know, under my sort of experience, okay, of working with and watching traders, that traders would sooner be right than make money, which is a fascinating statement to make. You'd think it would be the opposite way around, but I've just seen it with my own eyes too many times to realize traders would sooner be right than make money. And a part of that, particularly for men, is that we have been conditioned from an education system whereby, men hate being wrong and they hate losing money. The truth is, when you trade financial markets, you're going to be wrong and you're going to lose money from time to time. That is the part of the game, okay? It's like pretending that you are a boxer and that you can get in a boxing ring and that you will only deliver punches, you'll never have to take one, okay? That is a boxing dream, okay? The reality is very, very different. And it's the same with trading. If you think you can go through your trading career without actually ever taking a loss or being wrong, well, then that is a naive dream. Okay, that's naive expectation. You're setting yourself up for failure. The reality is you're going to be wrong, and you're going to be wrong many times, and that's okay. You don't actually need to be right every time to be a profitable, world-class trader, especially if you're following that first rule we talked about, where you are a risk manager first and a trader second. So get comfortable being wrong. It's okay. You are going to be wrong. So long as you're keeping great records, as we mentioned earlier, well, then you can learn from that. You can get better. You can improve yourself as a trader. It's okay. One of the things that can help you deal with that, okay, is to focus on the quality of your trades, not the outcome. Okay, I'll repeat that. Focus on the quality of your trades, not the outcome. I said a few moments earlier that, men in particular, we are conditioned, okay, we don't like being wrong, okay, we don't like losing money. That's going to happen to it trading, okay. The way we do that is when we come trade, we focus on the outcome of the trade, okay. If that trade is a winner, well, we feel fantastic. If the trade is a loser, we feel depressed, all right. We are attached our self-worth to the outcome of the trade. And that is actually that is of no importance whatsoever. The outcome of a trade is the thing that you have the least control over. What we want to do is to focus on the quality of our trades. Did I plan my trade? Did I trade my plan? Did I manage my risk? Those are 3 things that you can control. They are within your control, because once a trade is triggered, anything can happen, okay? Anything can happen. So focus on the quality of your trades. Did I trade my plan, or did I plan my trade, trade my plan, manage my risk? Those are the 3 things, okay, that are within your control, ladies and gentlemen. The outcome, not so much. And with that, what you have to remember is that you are not your losing trades. And what does that actually mean? Well, I find that, when traders attach their self-worth to the outcome of their trades, they find themselves, they're on an emotional roller coaster, ladies and gentlemen. As I said, when they're having winning trades, they're up, hooray. When they're having losing trades, oh Lordy, I feel so low, okay? They're attached their self-worth, okay, to their outcome of the trades. You are not your losing trades, okay? You are just a trader doing the very best you can based upon the skills and experience and the knowledge you have there. So shift your focus, right? Shift your focus onto the quality of your trades, okay? Onto the quality of your decisions, onto planning your trade, trading your plan, managing your risk. Do those 3 things, okay? It won't happen overnight, but I assure you that will actually help you improve as a trader. And one of the final points, ladies and gentlemen, is that you're going to find it takes longer than you imagine. All right, the trading journey takes much longer than you imagine. For some people, it'll be very fast. For others, it could take many years. Okay, that's okay. My suggestion is have patience and enjoy the journey. I said right at the start, okay, trading is a passion of mine. I love financial markets. I love trading. Okay, I love actually, coaching about trading. Okay, because it makes me a better trader. Have some patience, which I know is always easier to say for me to sit here and say, oh, just be patient. But what I will tell you is this: it is easier to be patient if you know exactly what you're looking for. If you know exactly, what type of trader you are, what's your favorite market, okay, how to manage risk, what's your favorite setups, and how to manage yourself, how to keep yourself in a good space, it becomes easier to be patient in your journey. And as I said, make sure you enjoy the journey. So in conclusions, ladies and gentlemen, remember what we've talked about here in terms of embracing your trading reality. You're a risk manager first, a trader second. Everybody pays for their education in one way or another. You have to learn how to trade for yourself, okay? Other people can't do it for you. You have to learn how to do it. Get a mentor, have a plan, keep great records. Financial media rarely helps, so just be content making your own decisions. Fundamental news, okay, when it comes out, will trump technicals if it's a big change. In terms of your charts and your trading in general, keep it simple and be comfortable getting wrong, okay? It's okay. It doesn't say anything about you. Focus on the quality of your decisions, not the outcome, all right? Focus on the bits you can control. And as we've just said, have patience and enjoy the journey. So if you've got any questions or comments about this particular session or any of the others, you can get in touch with Admiral Markets. You can, email them there, global@admiralmarkets.com. So, ladies and gentlemen, there we go. We've come to the end of our session. As I said, it was all about trading dream versus having trading reality. I said right at the start that it's fine to have dreams, it's fine to have goals, it's fine to have objectives, okay? But actually the way you achieve it is to embrace the trading reality. If you're able to embrace those points that I've just made there, you will make a big leap, okay, in your evolution and your progress on your own trading journey. The faster you embrace that reality, the faster you'll get to where you want to get to. So it just ends for me to say that thank you for joining us for today. As I said, there'll be a little feedback form after this session. Please be kind enough to fill that in for us. We would appreciate it. And as always, I wish you the very best of success on your own trading journey. And I look forward to speaking to you soon. Trade well, everybody.